This is Martin from Seeketch, the channel for learning about trading and investing. Welcome back once again after a short break in the market. Next week, the weekly stock market analysis show, where we look at the technical charts and try to understand what exactly happened in the market during the previous week, and try to understand and learn and plan for a better trading week for the upcoming trading week that's starting from May 21st, Tuesday, tomorrow, 2024. So look at the charts first and then come to the wrap up. In the weekly view, one of the weekly views where you can see the common handle, like the multiple flag breakouts are seen on the indices, most of them left side Nifty and right side Banknifty. This is another view where it's flag breakouts and the price well within the trend line channel on both indices can be seen. This is the daily view which shows the consolidation and then consolidation breakout that's constantly happening, but very well with volatility happening. Banknifty is the right side. Daily view. This is a candlestick view on the weekly. Look at what happened in the last week. Last week's candle is wide range bullish candle, and it's piercing, and it has scored more than 50% of the previous red candle. It's a piercing pattern, and it's wide range. It's bullish, and you can clearly see that the previous 2 weeks were retracements, so very short but sharp retracements extending from 4 to 6% of the indices, and a quick recovery of that just in a matter of a week. There's a very brief 2 weeks of retracement that you can see, but otherwise it's very evident that price is not is well within a range. It can very be seen. Remember, we had the all-time highs just 2 weeks before, right? Where the Banknifty even went as far as kissing distance of 50,000 last week on the left side, and then met with this. And also keep in mind, we have an election concluding week. That's last 2 weeks of the election is going on. On June 1st week, we have the election outcomes and the pre-polls and all that. Exit polls and all that will come in June. So which is the reason why the VIX is rising, and so more of the volatility that's there in the markets. This is the daily candlestick view. We had some kind of testing on the NSE that happened on the Saturday. That's the small candle, but if you ignore that, we can see a gap up and the price up move the green candle on the Nifty, and an engulfing even more wider bullish candlestick from the Banknifty that can be seen. And looks like it's following a pattern well within a channel trend line, and then take the dip, finish with the retracement a week back, and it's heading high. So it's a bullish positive week overall. You can see on this candlestick, and the candlestick also seems to be green. Bollinger Bands, if you see, it's clear consolidation. The price is moving down with bullish bias on the Nifty, and not so bullish bias on the Banknifty, but consolidation is very evident with the price. Expansion on the upside or downside is not seen on the daily charts. Bollinger Bands. This is very steady. The Nifty sub-resistance. We'll come back there after this wrap. So basically, market reversed after previous 2 weeks of slight downflow, and market closed 2% up at 405 points up, whereas previous week with the wide range bullish candle and the piercing weekly candle, piercing pattern. Banknifty also wide range piercing pattern is seen, and it's a 1.65, 782 points upon the Banknifty. Both of them are in the midst of a breakout on the cup and handle and a multiple flag breakouts of 20% and 29% of rally that's happening in the indices. Short term, it was less than 0.5%, 0.28, 62 points up on the Nifty, and 0.29, 135 points close on the Friday, if you ignore the Saturday's testing trade. The overall market had retraced 4 to 6%. There was a very brief and quick of 2 weeks, some slight retracement, and this rose back. But the volatility has considerably increased, almost 100% in 3 weeks of time, and it's at 20.5. It's extreme bullishness. Beginning of that, we have to be extremely cautious regarding that. The momentum has still not climbed the bull zones, neither has it trend crossed over the bull zones on the short-term daily charts. So on both indices, that's the story. So we have to be aware of the fact that although we had a quick big reversal that happened last previous week, it's still not ready to be called bullish. Whether the market will sustain this or not, this pullback will sustain, or will it just fizzle it out, or will it extend to the top of that consolidation Bollinger Band upper zones and then once again move back down, or would it break out from there? All these are questions. But right now, market is sideways with a lot more of the momentum and the trend to be caught up, which had lost the previous week. Right, small demands are clearly showing it's sideways consolidation that's happening. We've already seen that. Moving ahead, if you see the support resistance on the Nifty, the first resistance that will come in, obviously, is that main resistance that will come in is 22,789.94 is all-time high. So that means 22,800 is going to be main resistance, and after that, it can go up to the top of the channel towards the 23,000 and 22,900 because it's rounding number. We also have some kind of resistance that can come in. The support pattern on the downside will be 22,336, which will be 20 exponential moving average, and close by have the 22,242, which has got the 50 exponential moving average that can also come in as a support. The previous swing low did a bounce from the 100 exponential moving average 21,872 that connect. It's a good support. And after that, it can fall down to 21,710, which will break the higher low patterns below the previous long breach, and then it can reach to the 21,530 level. So that's levels on the downside on the Nifty and the Banknifty. If you see the upside resistance first will come in at 48,671, the previous high zone, and then 49,010, another previous high, about 59,57 to be precise. So those two places would have made resistance. 49,000, of course, is a rounding number, so resistance would be there. And after that, of course, 50,000 is the ultimate next zone of the rounding numbers that can be seen, and after that it can go as high as 5,400 or 5,500. That zones is the channel top. Downside supports will come in at the 48,000 big rounding number, which is also very close by the 20 exponential moving average, and 47,750 just got the 50 exponential moving average as well. Now, if that is not sustaining and it comes back to the 47,167 and 47,000 big rounding number, where 100 exponential moving average is there. And the previous swing lows could be the next supports that can come in, which after the 47,000 is also breached. Right, 200 exponential moving average is way down at 46,169. So another 1,000 points from there. So that's where the channel top also breached, and things will go back to bearishness. So those are the downside support and the upside resistances on the Banknifty as seen as of now on the daily charts. Let's get to see the momentum in the trend indicators, and we see that the momentum has climbed swiftly back in the bullish zones of the short term of the Nifty, but not yet on the Banknifty in the short term. While the medium-term momentum is still lagging behind the sideways and trying to rise up and climb. So momentum and trend has not completely caught, although Nifty has done its good bit of the momentum rising up in the bull zones, but not on all other time frames and other indices. So momentum and the trend also has to get. So this is a summary of this momentum and trend. So it's sideways the short term, and although it's bullish and rising up in the case of medium term on the Nifty. So with Banknifty, it's sideways on medium term as well as short term. So all we can say its momentum is still more or less sideways also. AD is a trend indicator, so is indicating there is bullishness in the short term, but the very falling trend strength as per the ADX. But otherwise, it's all bearish zones crossing. But bearishness does not have enough of strength. It's falling. If you look at the higher time frame, different time frames, the Banknifty and the Nifty. So trend also is similar to the momentum. Is that is not bullish yet. Overall, if you look at multiple time frames and multiple indices, that's some substance of the fundamental trend analysis. The volatility, if you study that with the India VIX, has spiked up 11% last week alone. So it's almost 100% spike what's happening just in the last 3 weeks. So it's now at 20.53 as I indicated earlier, and the market is rising up. Remember, the spike in the VIX is happening contrary to where the market is moving. So we have to be extremely cautious, and things can be very, very volatile. Big falls after big rise, and big, rise after big falls. All this becomes too much to handle when the VIX is about 20. So stay out of the market if you're not an expert. At least cut out your position size, and do not carry the trading until the election results outcomes happens on June 1st. Implied volatility and realized volatility difference, if you see it's improved to 100%, 50% should have been ideal, so it's higher risk, but still it's in favor of the option selling because of the high premium which comes along with the spike in spike in the mix. Nifty IV percentile also is very high in favor of the option sellers. Now short covering is the FUSI build up that has happened on Friday. Short covering is bullish in nature. People cover the shorts and then go long. So that's bullish indication that we're getting from the open interest futures. Now, why for the options for the May 22nd and 23rd, the Banknifty, the Nifty expiries, weekly expiries, you can see that it's almost bullish in the case of Banknifty. It's 1.23, and extremely bullish in the case of Nifty. So the open interest from the futures and the options is indicating that there is enough of bullishness out there. If you look at the levels, you can clearly see that the range that we have highest put writing is at 22,000. We're far from 500 points down from there where we are right now, and then 500 points about 23,000 is where the highest call writing is seen. The second highest put and call writing is seen at 22,400 and 22,500. Now, in the case of Banknifty, it's all betting is all happening at one single point. It's 48,000 where the highest put and call writing is seen, while the call writing seems to be at 47,500 and 48,500. So PCR and futures are bullish. Right, so levels are in a narrow range, you can say, at a very thin range in the Banknifty, almost at the same point. So it's a straddles that maybe will have been written in the 48,000. So there is a very narrow thing to happen, but it's bullishness around with respect to the options, so it can clearly be seen. Now, we're trying to understand the different in sectoral analysis. Last week's overall, if you see, we understand that there's no bearishness around here. It's either bullish or sideways across the major sectors that we have listed out here, right? The 6 ones. Now, IT sectors have caught up and then moved to the sideways with 1.5% up move. But it's sideways basically. It's not bullish on both the time frames yet. So we'll have to wait until we'll take long questions on that. Metal is big 7% up. Reality also is 7% up. There's two sectors that did really well apart from the water and the form of move. So the metal is 7% up, and it's ready to take long questions because momentum is trusted to be bullish on both time frames and the Banknifty candlestick that is formed as white. It's bullish as well. Water sector is 2% up to more than 2% up with the bullish momentum and trend in both time frames. Pharma also has nearly 3% up what is happening when the white bullish candle is formed with momentum. You have to catch up on the short term. It's still signs in the short term momentum. Right? The medium term is bullish. So we'll have to wait for some more time to take long positions on the farm. So auto and metal and realities where bets can easily be placed because of the bullish momentum and the trend. Right? FMCG also it's flat, it's closed last week, also it was flat. So let us wait for some more time for the momentum catches a bit sideways momentum, flattish move. In reality, as I said before, 7.5% bullish momentum. We can take long positions because the momentum is bullish on both time frames. Here's the charts for that. Left side is IT sector that you can see it's a cup and handle formation. Prices seems to end up with the tradesmen probably maybe trying to move up. So momentum is taking a support of the RSI 40 and they're trying to move up. Right? Good place to place your bets on IT sector. This is a time where if you want to enter, you can enter. Seems like momentum and the price both are at the support zones. Now it's inverted head and shoulder breakout that you can clearly see on the metal sector. Sorry, there's something wrong with the picture of the metal sector there. So directly go to the metal charts and then try to understand. Yes, so this is the daily charts. We're monitoring the weekly charts. It's weekly analysis. So it's a head and shoulder breakout that's already happened, and it's breaking out. Last week we have a big 7% move, and we have hit the top of the trend line channel. We are slightly cautious some posts will happen, but momentum is absolutely bullish. Trend is bullish. Moving on, auto sector is also at the very top. Bullish momentum and the trend, and very be cautious because it's at the very top. Pharma consolidating, right? Momentum is also bullish. Right? On the medium term, and the flag formation is happening there. Right? Momentum and trend is bullish. FMCG consolidating, or it was just trying to climb back in the bull zones from the medium term. Trend is also trying to cross over. Let to wait for some more time. We can take. Basically, it's consolidating in sideways in FMCG. We've already seen that. Reality is broken out of that flag pattern. Once again, at the top of the trend line channel, they are cautious, extreme bullishness and trend momentum. Moving on, industrial heavyweight, not industrial, sorry. Heavyweight stocks that contribute maximum to the indices, right? We just try to analyze that. Sometimes it's known as the thick stocks, right? The 4-5 stocks that contribute maximum. STC Bank stands on top on that and sideways. Right, it was one down, just recovered, and green candle, Pearson candlestick can be seen, but it seems to have taken a support at the trend line, and then once again trend hang on and move, but otherwise it's sideways. As industries had almost a flag breakdown, but managed to recover, then climb back to the flag. Momentum is still yet to catch me the bull zones. Yet, one was slightly sitting sideways and remains there, it's on the way up. So here also sideways momentum here. ICICI Bank, look at that. It's a major bull zones, green close, and then try to head up to the channel top once again. Right, bullish. Infosys was consolidating. It's a flag pattern that may be falling. It was falling down. It seems to have taken a support in the mid of the consortium zone, and then momentum also seems to have taken a support in the sideways momentum and at RSI 40, and then try to move up, but sideways basically. TC is also sideways. Consolidation is what you can see there with respect to momentum in the trend. Kodak Bank has recovered dramatically. It had fallen down that major support zones. It had breached that 2 weeks back, and in 2 weeks it's back in the consolidation once again. Remarkable recovery and momentum in the sideways from the bear zones. IDC sideways consolidation, but a flag breakout possibility is always there. Right? As of now, still sideways. So we have mostly sideways heavyweight stocks other than the ICICI Bank. Everything is sideways, right? But luckily we don't have anything in bear zones. That's a good part of the heavyweight. So sell-off is there, but none of them are bearish. The mid cap and small cap, you see, they are back to all-time highs ahead of the election outcome. At the peak, very cautious, more or less bullish, trend is cautious, but a remarkable recovery from the March. Complete recovery in a fraction of 1 or 2 weeks. Complete recovery in all-time highs, both. So there is buying across the market is what we can understand. The big cap and small cap also at all-time high. Institutional participation, if you see, it was sell-off from the institutions, foreign institutions primarily, more than 10,650 crores last week, and DAs were trying to balance that with buying more than that, 40,400 is the reason why market is seeing. So it's domestic institutions' money that's holding on the market. So net longs are also moved out the FI side. So you have a bearish on the futures and the options, that bearish bets on the FNO that's placed by the FNO, as you can see. But those are all insignificant. From the FNO, it's the negative betting that is seen last from the FIs. Net longs on the rate is also most out. So we'll say 5 participation is concerned, remains to be concerned this week as well. Now, moving on, we try to understand the global markets and the global currencies and the currencies. We'll analyze and try to get a the feel of what the global market is saying. So dollar, red, it's 0.80% down. It's not 4 or it's closing off. Basically, it's consolidating, as you can see on the right side. Right, it's sideways falling momentum that you can see. The USD INR currency pair is 0.32% down, 83.2 downside chart that you see there. It has been consolidating at this 83 zones for ages, centrally managed by the Reserve Bank, and it's having sideways falling momentum as of now, but nothing really takes it down, nothing really takes it up also. So it's been this zone for a very long time. The rupee remains to be weak since because of this rate, because of so USD annual charts also indicate that the rupee is weak, just as weak as it has been since last 2 or 3 years. Crude oil is had attempted to move up the trendline channel, but came back with some retracement. It seems like once again it seems to be likely to head towards that. So this week is 2% up. It's 79.7 towards again heading back to the 80 plus. It's not great, but as of now it's sideways and rising, not at bullish yet. So we're not worry too much on that. Gold, if you see, has broken out its all-time highs. Crazy. So the gold keeps hitting all-time price 2.3% this week alone. With bullish momentum rising up, then it's a good thing that it's hedged. The market is not that great, and the gold is moving up. It's a hedging instrument, is good, but it gives a worry that if equity eventually may be heading to a crash or not. It could be that the market is prices, the money is flowing in from the equity markets to the safer havens like the gold. So that's one reason why you have to be worried on that fact that gold is rising up. US markets are green at all-time highs. Dow Jones 1.2% up, Nasdaq is 2% up, S&P 500 is 1.6% up. On this bullish rising momentum, up for 6 to 8% retracement. Here we go. Right, you can see that's all-time high. Consolidation flag breakout, cup and handle breakout, not cup and handle, cup pattern, rounding pattern breakout, rounding pattern between Nasdaq also consolidation breakout. Consolidation breakout S&P 500 also after the rounding breakout. So all-time highs US markets. That's the reason why our market is also moving, most likely because it's another market. So overall, global cues are good with regard to crude oil, dollar spikes, and then US markets. Not that bad. Two stock picks for the next piece. One is GAIL, gas relatively, and the other one is Hindalco, both on the long side. It's a flat breakout that could eventually give you some advantage if it happens. With the tight stop loss below the below the point where the flag gets negated. Also, there is a momentum posted towards divergence, which is bullish in nature. Okay. Momentum and trend is rising up. Price patterns are having flag pattern, so it's a good pick, good bet with tight stop losses. Volumes are also reasonably more than moving average. Hindalco cup pattern breakout. Potential for further breakout up move because momentum is rising, trend is rising, volumes are good, and have tight stop losses once the pattern is negated. Cup pattern breakout fails, then just get out. Hindalco metal sector also is moving up, right? The oil and natural gas also sectoral wise also they are moving up. They are bullish patterns, momentum, and the trend are all bullish. That's the two stock picks for the next week. Another payoff, another is the weekly options strategy, the payoff of double diagonal spread, where we sell the OTM put and calls and then hedge with the upcoming week's put and call. It gives advantage when the big spike is there. It gives reasonable risk reward, and probably profit is good enough, and a very good wide range, 20,000 and 22,000, almost 1,000 points to 29.54. That's a weekly window. It expires from next Thursday, so it's a reasonably good bet at the moment. I like the break-even points that we can when we are using a current spread. Current spread is nothing like an iron condor with the legs of the 4 weeks that's used for hedging. Right? That's the payoff charts that you see here for the Nifty option strategy for next week. Right? And they're actionable apart from the stock weeks. Now let's just wrap it up. Market reversed after very brief 2 weeks of retracement into a short-term consolidation now, and still it needs to catch up on the momentum before we can say its bullishness back, right? Please make a note that market trend both the dice so close above 2x moving average. The higher low pattern is still maintained, and we had a very brief 4 to 6% of retracement happened, when the maximum retracement so far is 5 to 8.5%. When the rally has happened, the Banknifty is 29%, and the Nifty is 35%, breaking out of the cup and handle pattern with multiple flag patterns. So we just try to bucket out the different parameters in favor of the bulls and the bears. Right? Here's what is mentioned. So the fact that 20 exponential moving average is made is in favor of the bulls. When the band is not expanding on the downside, it's in favor. It's consolidating, is in favor of the bulls again. Higher low patterns maintained. But let's call price all-time highs. Most of the security prices are on the sides of bullishness zones. Otherwise, none of them are in the bear zones. Most heavyweight stocks are the side of the bullish zones. Even the IT sector stocks has now climbed back to the bulls, into the sideways zones at least. Crude oil dollar index are not in bad shape. Right? At least it's not breaking out. Using dice showing green, it's an all-time high. Put call ratios and open interest is showing bullishness, and short covering is again bullishness on the futures oil and traders built up. So overall, it's in fact it's in favor of the bulls, so it's in favor of the bears then. Momentum in the trend is need to catch up more before you can say the bullishness is back. Even when the fact is that a very good recovery has happened last week, but the momentum in the trend needs more time. And very high rise in VIX above 20.5 is something that you have to be very, very cautious about. Institutions continue to sell every single week. Foreign institutions especially is a worrying fact. It's in favor of the bears. The fact that the market has corrected 4 to 6% and stopped there briefly and then try to reverse, and give a positive close. But the fact also remains that volatility increased 100% last 3 weeks alone. Market is basically consolidating violently within a range before the election outcomes coming. So that's what is happening. So even when 20 expansion moving average book closes there, normally when the trend has to catch up and then give an expansion on the outside and break out from there. Only then we can say we are in the next leg. Until then, it may be just a consolidation before a crack down. We never know. So all eyes on that. Technically, my view for the next week is neutral, sideways move with a mild bullish bias. It can go up to 23,000 at least. Aggression, fears, inflation, rates, war, COVID, and all these things can screw up all your technical analysis and then give you surprises, black swans. So we have to be. Only thing that you can do on such surprises and market views is to have tight stop losses. Not only at the positional levels, but also at the portfolio level as well. So 22,000, 23,000 is the level for the Nifty the next week. That's looked from my side. 47,000 and 49,000 is also going to range that I look for the bank for the next week. So as long as this 28,000 and 40,000 is maintained, things should be okay. We may be consolidating still for the next leg. But otherwise, if you're not able to maintain those two levels, then we may have trouble. So always have hedge positions all night and stay out of the trade, at least till the elections are over, for novice traders in the options especially. And you can use different hedging strategies by covering or hedging your stock investments and all that. The various techniques we have, just a control playlist where you can understand all this. You can use gold, you can use Nifty futures, and, you can use options. Different kind of option strategies and all that to hedge your overall portfolio, not just your individual portions. And you can hedge your investment as well. So all these are becoming very important at the time when the uncertain election outcomes are coming. Right, protect your investments with hedging strategies. If you are risking too much, or stay out of the trade and options trading if you're a novice. These are things that you have to be extremely cautious. It applies very much. It's a once in a 5-year event, and nobody can confirm the outcome of that. Stay out of the trade and the option trading if you're a novice. Protect your investments with various different strategies. That these are the playlists. Check out and go through them. That's all I have for the next week. Play safe. Thanks for watching. Subscribe if you like it, share with your friends. Thanks for watching. Bye bye.